Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 17th of January, 2025. Let's take a quick look at these closing numbers. Great week for equities. Only the biotechs were down. They continue to be the laggard. Great week for Bitcoin, which is up 10%. And just across the board, we had strength, of course, except for those biotechs as noted. So let's look at these charts, make some sense of it. We've been talking for the last several weeks about this pattern of lower highs and lower lows. We did make a lower low this week, and it came down right to the anchor from the August low, and that's where we started our bounce here. In hindsight, it looks perfect. You should have bought in there, but I will tell you, because I was trading in here, that when you have this type of rally and then it comes all the way back down, it shakes your confidence a little bit. So I was only day trading in there, and that's the way I trade it. That's the way I manage risk. I day traded on this day for the S&P, and fortunately got long in the pre-market on Wednesday. But the market is making impressive movement here. Let's take a look at some of the key things. What we'll look at, I guess, first is these four charts from TradingView, and you can see. Of course, this is the S&P 500. That purple line is the anchor from the all-time high. The black line is from the election. So we got back above both of those. And now if we pull back, that's going to be an important level, about 593 and a half to 594. That's where we're going to see, want to see hold. And somewhere in between 515 and 520 is what we're going to see for the NASDAQ to hold. Semis are making an impressive move, and the Russell 2000 is a little bit weaker here. Let's talk about Bitcoin for a moment, because what I spoke about last week, I was hoping that we would get a pullback down towards 88.4. That's where I had a bid. Now, if you listen to me each day, it's only $10 a month. On Twitter, I was updating this each and every day. And over here, I said, because it broke higher, if it as it was breaking above the anchor from the high, I said, if it can pull back down in here, I'm going to buy strength. That's exactly what I did. I added about 20, I not about, I added 25% position to take my position up to a 75%. I added that just under 100,000. So now I have a 75% exposure. I was looking for a pullback. It didn't happen, so I adjusted. That's the way you have to trade. Listen to the message of the market. This S&P 500, I was looking for, and all week I've been saying, "Hey, this is nice strength. This is great. Enjoy it while we have it. It's above a rising 5-day moving average." There was a perfect, absolutely pinpoint perfect example, and I explained this in detail Tuesday night to subscribers. Again, $10 a month on Twitter. So if you want this information each and every day, subscribe on Twitter. That's the only way you can do it. If you want to miss 4 days of the week and just get the free one, that's fine too. That's what this is. Anyways, I laid it out perfect for a chase the gap, get above VWAP, and it laid out absolutely perfect. We got the midday pullback and it closed towards the high. I spent about 2.5 minutes going over that for subscribers on Tuesday night, that we had a strong possibility that setup would come. And it did. So here we are. We're still rising, of course, and catching this momentum. What I think is likely is that we probably break a little bit above this level, and then hopefully we start to correct a little bit early next week. I was thinking we might do something like this, but of course, the market has said no, that's not what we're interested in doing. So if we can pull back and maybe find buyers along that 50-day moving average, which is rising, and then the 20-day moving average is going to start to rise on Monday because we get rid of this data. So it's declining today, but on Monday, it'll make a move like this. On Tuesday, it should look like this, and Wednesday. So if we can pull back in here and make a higher low, I think you've got to get more aggressively long as it breaks from that. And that's what I'll be updating each and every day. Meanwhile, we have an intermediate term pattern of higher highs and higher lows in here. So you have to respect that and say, even if you think that this market is topped out, you can't short it while we're above a rising 5-day moving average. I don't think we've topped out. As I've mentioned over and over again, when you look at the weekly chart, this is a normal uptrend. It gets some pullbacks. And this was, what was this pullback? 7%? I don't even know. The percentages don't matter. What matters is getting back involved when the market tells you to. So for the S&P 500, I think we'll likely continue to see a little bit more momentum to the upside before we see a little bit of profit taking. I don't want to buy that dip, but I do want to buy strength after. Hopefully, we can see that, as I said, the 20-day moving average maybe comes up underneath it. And then we also see the anchor from the election right here, the orange one, and then maybe that becomes the support. So that's definitely something to keep an eye on as a theme for next week. The Nasdaq broke its pattern of lower highs and lower lows that we've been talking about. So are we in an uptrend? It sure seems like that way on a shorter term time frame. We're making higher highs and higher lows above a rising 5 day moving average in here, and we are above the year to date anchor. That's that blue line on the intraday as well as on the daily chart. So that we want to see hold, and it did hold. On Thursday, we closed right on it. Today we gapped up, and now we're moving higher. So I think you really have to look at this market as the bull is back in business here after a corrective move, and maybe we see a little bit further upside, but I'd be looking for weakness to hold at support and then turn higher. So we've got this red anchor from the all-time high. We've got the orange anchor from the election, the year-to-date anchor. If those start coming together and we meet them with this market, on a pullback, then you're in a great position for continued low risk upside. Russell 2000, I'm still not thrilled with this one. And maybe what I was drawing in here is maybe we continue up towards the 50-day moving average, any anchor from the election. It's just run from 214 up to 227, so 13 points. That's about, what is that? About 5%. So not a huge percentage move, but still, if you're looking to get involved in the Russell 2000, I'd prefer it kind of does something like this, pull back a little bit and then get going. Personally, I think it continues to be the weakest market. And even when you look at the weekly time frame, it's just a choppy mess. It did come down to the 200-day moving average, so that's good. But when we look at where it came down to, this is exactly the level we were looking for it to come down to. If we go back to last week's video and the week before that, even, I said it's highly likely that we come down into this area where the anchor off of the April low and the 200-day moving average were met. So now if we can see a pullback and create a higher low, then maybe this one can rally a little bit. Incidentally, the Nasdaq absolutely nailed that anchor from from the September low, and that's the level we were looking at as a level of interest. I didn't buy and hold there. Part of me wishes I had, but I've got to honor my discipline. I hope that you find your way in the market and realize there's a right way for everyone. It's not about getting every single move right, but being in the majority of the time when it makes sense for your strategy. For my strategy, it doesn't make sense to be buying semiconductors. They've had a nice little rally in here, no doubt that this past week, and they're behaving well for the year so far. But we're kind of still just stuck in this bigger range that we've been talking about, and that's not a bad thing. We're digesting this bigger rally. First, we had the price correction. Now we're seeing a time rebuilding of the energy in here. And it's likely at some point in this year, these are going to take, well, they actually are in the leadership role this year, but they'll take a leadership role and not be in a range as well. So we're still just kind of bouncing in this around in this bigger range. Biotechs, as mentioned, continue to be the worst as they should be because they're the ones that are in a primary downtrend below the 20, 31, and 42-week moving average, making lower lows and lower highs. When we look over to the daily time frame, we see these rallies that are quickly sold into. Maybe we get a bounce in these, but I wouldn't trade it, not when we've got so much strength elsewhere. The TLT getting a little bit of a bounce. I mentioned earlier this week that a measured move brings us down just about to the lows from 2023. I still think it's obtainable, but as I mentioned, I think on Thursday, we'll get a little bit of a bounce first, maybe, and then the next drive lower probably brings it down into here, and that's likely to be an important low if that occurs. I don't trade bonds, so I'm not so concerned if I miss it. If you are involved, then the point of this circle is that your worst case stop should be underneath that level. Financial stocks, we saw a lot of earnings for this group this week, and all the biggies, they had good earnings and they're being rewarded with higher share prices. So they're getting a little bit extended, but if you're long them, just raise your stop up. Incidentally, look at where these things bottom. Do you think that's a coincidence? Go back and look at the last couple of weeks. We've been talking about the high likelihood that they would come down to this anchor, and they nailed it just perfectly. That's again, you just can't make that stuff up. Energy names, I'm so glad I don't trade them because I'd be thinking they're up too much and maybe wanting to short them. We spoke about the likelihood, I thought, that maybe we get stuck underneath these moving averages and roll over. Well, the market had a different plan. I didn't short this market. I didn't go long this market, but this was a potential scenario. When the market tells us that that potential scenario is not happening, we can stay stubborn and say, well, I think they're up too much and short them, or we can listen to the market and say, hey, you know what? The market got saved. It didn't break down. So do you want to remain stubborn and try to, pick the top in here, or do you want to listen to the message of the market as it says higher highs and higher lows above the rising 5-day moving average? So from an intermediate term perspective, it remains a beautiful uptrend. That's why I didn't say there is resistance here. I said this is a level of interest that has the potential to become resistance. So we want to watch it carefully if you're long. It's not a place to sell. It's not a place to sell short. It's a place to raise your stops. And that's the way I look at every level of interest. Support and resistance are only known after the fact. People who say, hey, there's resistance at 91 for the XLE, they don't know what they're talking about. People who say there's resistance at 540 on the Qs, they don't know what they're talking about. It's a level of interest where the sellers showed up before, but it doesn't mean it has to next time. So, just listen to the message of the market. And if your thesis is invalidated by the market action and the market says, it looked vulnerable. Everything textbook about it said it looked vulnerable for a breakdown, but there was no confirmation of it. One, you don't lose money on the sidelines waiting for price confirmation. And two, you don't lose money, fighting the trend as it goes higher. More importantly, you're not saying, hey, I'm right, the market's wrong. It should find resistance. People will say, hey, there's resistance at the 200-day moving average. There was no resistance at the 200-day moving average. It closed there that day. And I saw people saying it's resistance. It was a probe of the 200-day moving average. If it backed down over the next couple of days, you could say, yeah, that was resistance. Anyways, it's a level of interest. I don't mean to go on and on about that. I was looking for the potential of a bounce in Apple this week, but man, it just looks like garbage. We were talking about the possibility of a brief lower low below the anchor off of the August low, and then for it to rally, but it didn't show any evidence of that. Maybe next week it can. Let's take a look at a 30-minute time frame by itself here for Apple. You still see we still have this orange declining 5-day moving average, so it's guilty until proven innocent. On Monday, as actually on Tuesday, we have another 4-day week. So we've had 3 4-day weeks this year, I think. Anyways, on Tuesday, we get rid of this data, meaning if the stock rallies up to this point, what's going to happen to that 5-day moving average? It's going to start to flatten out in here. Then if Tuesday it rallies up to the year-to-date anchor, creates a higher low, then you could see a bounce maybe, the third or fourth day into next week. So meaning, the third day would be Thursday, and the fourth day would be, so maybe Tuesday through Friday. I'm sorry, Wednesday through Friday. Start looking for the possibility of a bounce in Apple. Nvidia, I know it's everyone's favorite stock, and it's having a little bit of a rally here. I would just caution you that we've had this big run in the stock, and it's still consolidating. Realistically, the move from last year, we have the a couple of important levels above that have the potential, these are levels of interest, that have the potential to be a place where enough supply is released to become resistance. What are those levels? Well, the anchor from the election. It acted as resistance over here. Will it this time? What about that thick blue line? That's the anchor from the beginning of the year-to-date anchor. What about the thin blue line? That's the 50-day moving average. The 50-day moving average, unless the stock rallies strong on Monday, that or Tuesday, the first day of next week, the 50-day moving average will be declining as we get rid of this data. The 20-day moving average is advancing. So it's a lot of back and forth. Not We just don't have clarity. So we want to just be careful with it and say, let's go where the low risk, high probability trades are. And that's what I do every single day for subscribers to alphatrends.net. Have a good weekend. It's a long one, and I'll talk to you next week. Thank you.